Once upon a time, in the bustling world of technology and finance, a seismic shift occurred that sent shockwaves through the markets. It was January 27th, 2025, and the once unshakable giants of Silicon Valley found themselves trembling. The cause of this upheaval? A relatively obscure Chinese hedge fund turned AI startup named DeepSeek. DeepSeek had just unveiled its latest large language model, R1, and it was nothing short of revolutionary. Consumers were flocking to DeepSeek's chatbot, which quickly became the most downloaded app on iPhones over the weekend. What made R1 so extraordinary was its efficiency. Using innovative techniques, DeepSeek had managed to train AI models that performed on par with the most sophisticated Western models, but with only a fraction of the computing power and consequently a fraction of the cost. This breakthrough came at a time when American tech giants were pouring unprecedented amounts of money into AI infrastructure. Just the year before, the combined spending on data centers by Alphabet, Amazon, Microsoft, and Meta had reached a staggering $180 billion, a 57% increase from the previous year. Microsoft had even announced plans to spend an additional $80 billion in 2025 on AI infrastructure, while Meta was preparing to invest $65 billion in the same year. But DeepSeek's success raised a troubling question. If high performing AI models could be trained with less computing power, what would become of all that investment? Shareholders in the cloud computing giants might have welcomed a reprieve from further capital spending, but now they were left wondering if their investments had been in vain. The ripple effects were felt far and wide. Nvidia, the AI chip making champion, saw its market value slump by 17%. Shares in Siemens Energy and Cameco, companies supplying data center equipment and the energy to fuel them, tumbled by 20% and 13%, respectively. The panic wasn't confined to public markets. Venture capitalists had invested $132 billion in AI startups in 2024, a more than 50% increase from the previous year. Now, model makers like OpenAI and Anthropic, which had been burning through cash, faced the daunting prospect of raising capital in a market where DeepSeek had shown it was possible to do more with less. AI chipmakers Grok and Cerebras, as well as AI cloud computing firm CoreWeave, also found themselves in troubled waters. As the dust settled, three major uncertainties loomed over the market. The first was the economics of AI. DeepSeek's innovations suggested that the upfront cost of training a model could plummet. However, this was happening just as a new wave of reasoning models, including OpenAI's O3 and DeepSeek's own R1, were deploying much more computing power at the inference stage, where the model responds to questions. These models could think harder about queries to generate better answers, but what this meant for overall spending on computer power remained unclear. The second uncertainty was geopolitics. America had been trying to stymie China's AI efforts by restricting the export of cutting edge chips and the equipment used to make them. DeepSeek's success showed that this strategy had so far failed. President Donald Trump might conclude that the answer was to further tighten export restrictions, which would only worsen the blow for companies in the AI supply chain. The final uncertainty was demand. Some Wall Street bulls saw a silver lining in DeepSeek's breakthroughs. As AI models became cheaper to train, companies could use the technology more widely. Shares in businesses, building services on top of others' AI models, like Salesforce and Apple, had already risen as investors bet on falling costs. But there was a darker scenario too. For many enterprises, the cost of AI was less of a problem than the difficulties of implementing it on a large scale. If these challenges persisted, underlying demand for the technology could start to sag, turning today's market slump into a full blown collapse. And so the story of DeepSeek serves as a cautionary tale, a reminder that in the fast paced world of technology, even the mightiest can fall, and innovation can come from the most unexpected places. The markets, once a playground of unbridled optimism, now stood on shaky ground, their future uncertain. Only time would tell how this chapter in the history of AI would unfold.